Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It's Friday, finally, finally, after this tough week. And we will not be broadcasting on Monday because, of course, it's July 4th holiday. So we won't be broadcasting there. Well, guess what? It looks as if the market has moved up a little bit, which is nice because it was getting getting kind of tiresome that just kind of retreated. But here's the thing about the way the market is trending right now. It is tough to trade. Why? Because the Nasdaq was up today, but guess what? The semiconductors took it on the chin. So boy, oh boy, it is just it is very difficult to figure out where to be in the market. Wanted to kind of go through the indexes here. The Dow was actually up, which is nice. The Dow was up 1.05%. S&P was up 1.06%. Then the Nasdaq was up 0.90%, and the Russell was up 1.26%. All very good, but the semiconductors were down, and that is really, really not the greatest thing. This is the semiconductor index. It's called the VanEck ETF, or symbol. It trades under symbol SMH. So what I'm gonna do is I'm gonna put the live chart up out here for SMH and kind of let's take a look at this because this is really interesting. You would have thought that we should have seen the we should have seen the semis move up, but it's telling us something is rotten in Denmark right now, because if the Nasdaq goes up, we should expect the semis to go up, but they did not. The semiconductor index went down today, and fairly significantly. And so this is an area that if we're going to get back in the market, we got to be extremely careful. So stocks like NVDA, we just don't want to do anything here long, because as you can see, the price, this is NVIDIA, is down. And let's look at AMD. AMD, I believe, is the same. Yeah, AMD. Let's take a look at that one too. Again, downward trend. This just downward trend in the semis. So we don't want to be long in the semis. It's just not looking good in terms of that. So we don't want to be long in the semis. Let's look at Intel INTC. This, of course, is probably one of the really big ones. This is actually a Dow stock, but it too has problems. I mean, this is Intel. This is a great company with if we look at their fundamentals, I mean, great earnings, but their sales were down a little bit. So here's the thing. A lot of this is, supply chain issues. So even though I would love to go back into the semis, I'd love to be buying semiconductor stocks right now, but you just can't justify it. And the reason you can't justify it is because the whole sector is going down, but the Nasdaq in general is going up. So the question is, why? What gives here? What's the deal? I don't know. I'm trying to figure this out myself. But here's one thing I am doing. I am using bear put spreads to basically benefit from the market. Now, even though the market went up today, it's still in a uptrend under pressure. So I do believe very strongly that we're going to see the market move lower, at least through the summer. I mean, that's sort of what it's looking like. I mean, I think we're going to go into a full-blown recession. And, I don't wish this on anybody, but I do think we're going to go into a full-blown recession. I do think, though, that, that oil prices, gasoline prices probably will moderate a little bit. But I don't think they're going down that much. I really don't. So what did I do? Well, what I did today was that I went and did essentially, these are the shorts that I have currently. I have a short on American Express, Lululemon. I just entered this one today, and they're already positive, which is very, very nice. Now, what do I mean by that? Well, it costs us a certain amount to get into the short, and then they are starting to trend positive, which is very nice. Now, I am underwater on several of them. I mean, I'm underwater on Costco, $116. But I do believe very, very strongly that we shall see, because of the weakness in the retail sector, I think we're going to see this one move down as well. This moved up today. Let's look at Costco. Let's kind of look at the worst of, my holdings now. I did short it here. It came and it's come up to the 50-day line. Now, I do believe what's going to happen here at the 50-day line is I think we're going to get some resistance. We shall see. And indeed, there's a little bit of fall off after hours. So if this starts a new downward trend, that would be a good thing. But there was some serious buying coming in here today, and the relative strength. I should be. I got to eat my own dog food here because the relative strength line is moving up. But I do believe Costco and all the other retailers are weak. I think that's what's going to lead us into this recession, unfortunately, is weak on the retails, on the retail side. Now, basically reason I'm talking about that is like, let's take a look at Lululemon, LULU. This has been a strong performer for a very, very long time. But I do believe that we're going to see a lot of weakness in this one because, they've got yoga pants, and who doesn't like yoga pants? But they're very expensive. Their yoga pants are very expensive. I did make the short here. Basically, this is a 270, 260 bear put spread. What do I mean by that? Well, what you do when you enter these bear put spreads is that you buy the upper spread, you buy the upper put, and you sell the lower put. And if the stock moves below the upper put by the end of the time, the time that you have, you will make money on it. So that's kind of what I'm doing. This is sort of a very conservative way to short the stock. It's not by borrowing the shares, which you would normally do, but by using options to do that. So that definitely, I think it's a good way to go. And currently, we're doing fairly well doing that. That kind of trade. So let's look at kind of what the situation here is with the Lululemon spread and sort of how we did it. And basically, when this slide was taken, Lululemon was at 265.23. Now, currently, it closed below that at 263.82. So you'll notice this here. It's actually dropped a little bit from there. So let's see if we can take a look at the with the office with the program that I have. Let's see if we can kind of take a look and see kind of what's going on with the with the spread. So if we go over here to the this spread, this is the Lululemon spread. It did close. Let's see if we can get that. There we go. So it did there we go. Okay, so it's refreshing. There we go. Okay. So Lululemon ended up today at 263.22. So based on that, we started out very nicely here. We're already $3 in the green. So as it moves forward and hopefully down, we will see it potentially give us a better result here. So as the stock moves lower, and I do think we are going to see Lululemon move lower, just based on the general market. I mean, it's come up to this 21-day line. It failed. It's pulled back, and we tried to pull up to the 10-day line, but I do think that we're definitely in a decline here. No longer is the stock under accumulation. I think a lot of people are going to have to sell it, and of course, if they do, the value of those puts will become more valuable. So currently, what's happening is we are still up until the last quarter of 2021. The number of funds that were in this stock were appreciating. It basically hit its all-time high in December of 2021. Now, the first quarter is where the first quarter is where where it started to fall off a little bit, and that happened in the first quarter. And I suspect we're going to get another fall off in Lululemon, just because even though they have a good technical look, I mean they've had some definitely good numbers here. I mean, they're growing by over 20% a quarter, which is phenomenal, and their profits are moving up very, very nicely. But I think the overall market is not going to be kind. The PE ratio currently is 34, which is high for a retailer, especially in the apparels and shoes area. And this is one of the worst performing sectors right now, this retail apparel shoes sector. And overall, Lululemon has been bucking the trend in this sector, but I don't think that's going to last forever. I think that we're going to see it basically move lower. So I hope I'm right on this, but this is sort of the trend for Lululemon, and with the spread that we have, we should be able to see. Hopefully we'll be able to see it appreciate here. But the way the spread was set up, very simple. Purchased one contract of the 270 September 16th put, simultaneously selling the 260 put September 16th. Same date here, same expiration date, and the net debit was $485. So this is $485, but it has the potential to make quite a bit more than that. Let's kind of take a look out here. Yeah, I mean, it could make, if depending on how far this falls, this could easily, this could be, this could make about 500 and I think it's about 570 on this. So it's a pretty good return. Let's kind of look at the line chart to see kind of how that looks as it would move out. So as the stock declines in value, and I do believe it is going to decline in value, you can see it sort of moves into this zone here, and then eventually it'll top out. The top amount this is going to make is just a little bit over $500, at the expiry. But if the stock continues to fall, and this is what I think is likely to happen here, then we're going to see it. We're going to see it basically increase in value. So it's kind of like a weird way of looking at this chart. As the stock goes down in value, currently it's about 263, but if it goes down, let's say to 240, which I think it may, we're going to start to make the money. Now, of course, this is sort of the glide path. So as it gets closer to expiry, then we will see it hopefully move lower, and if it moves lower, of course, the value of the spread increases. So that's kind of a good thing if you're in that spread in the way that I think you could be. So a few more things here. These are the prices of these are the share prices of everything that I have short. These are all bull put spreads, bear put spreads, excuse me. The only thing that was actually down today was an up day in general. And so everything pretty much that I have was up, but except for Lululemon, which was down. And I do think that Lululemon is now going to start to roll over and probably move lower. We'll see how it does. And if need be, we can adjust the spread and and do it that way. So basically, this is currently, I have nothing long. I have no long holdings. I'm holding no stocks, no ETFs. I do believe that the market is likely to move lower, and there's a number of reasons for this. But let's look at the S&P 500, and that kind of is going to give us a good idea of why I think that there's a potential for this. I don't think we're out of the woods yet on this. I think we're going to go lower, and I don't think that's that. I don't think I'm stepping out a lot on that. As you can see, these are the legs that I've put in here. Of course, on that first leg down, we know about that one. Relief rally. Second leg down, relief rally. Third leg down. The third leg down was a very far drop. It dropped all the way, basically down here to 38.10. We did have this rally. You'll notice how that's kind of topped here. It's not peaking. It's just sort of flat. Well, that means it can't get beyond about 41.77. That's a ceiling there. Notice how when they finally ran out of buyers, boom, we had this drop here. And then this is the third leg. We've moved up now to the 21-day. We've moved up to the 21-day line. I think that it's getting weak here at the 21-day line, and I think we're going to fall. I think we're going to fall again. We've been trying to hold to the 21-day, but I think we're going to have another slippage, and I think this one probably will go down to about 3,500. I'm predicting that we're going to bottom out at about 3,200, but I think the next leg down, and I think we're in the beginning of this, we're sort of rallying here, and I do think the next leg down is probably to about 3,500 on the S&P. So we'll see, but I do think we're going to go down a little bit lower. So let's get to the questions. Thank you for holding on here. A little bit of preamble. All right, let's look at Costco. This is from Lisa and COST. Now, I do have a bear put spread on this one. I do have a bear put spread on Costco. We are still a little bit underwater on that one. If you look at the bear put spread here, the bear put spread on Costco, basically we're down on this one about $114. But remember this, we extended this out. We did a rollout on this one, a roll up and out on the spread. We've got until October for this one to work. So I think it's highly likely that this spread will work. Let's kind of jump in here and see on the Costco. I'm going to kind of look at the kind of where we're at in terms of this Costco spread, and that may help a little bit to kind of take a look at this. All right, so what's going on here? Well, we have this rollout bear put spread. We initially had a bear put spread that was going to expire on July 1st, okay? And that, of course, is today. We rolled that out, and the way we rolled that out was that we purchased back the contracts. We purchased back the 405 puts, and we sold the 400 puts. So we zeroed that out basically, and then we went longer by we moved up and out. And what we did is we then purchased an October 21st 425 put and simultaneously sold a 420 put. Now, if this, all in currently with the rollout and everything, we have 660 in the contract right now. Currently, the break even, if we were at the 370 today, we'd have broke even. We were at 480, so we're quite a long way away from that. But if we hold this till the end, till October 21st, the break even is 421. As you can see, this it's a little bit of a, we're still right here. We're still we're still got to move down a little bit in order to start making the money. The potential in this one is not as much, of course, because we did roll out, but we still have a potential of about $370 on this one. Currently, we're down a little bit. We're down about $115, but as that moves, we should be moving back to a better place. So on the on Costco itself, I do think what's happening here, and we'll see. It's hard to tell exactly, but it has rallied to that the 50-day line. I do think we're going to get resistance here. Now, why do I say that? Well, the reason I say that is because we got resistance at 491 back here a few days ago. So I definitely think there is some resistance here. We're starting to see it a little bit. So it's come up, and I think we're going to see another leg down here on this. Now, we've got to get down to about this level to start making profit, about the 425 level with the adjustment. And also another thing is that Costco is getting weaker. It has completed the death cross where the 50-day line has moved below that 200-day line. So I do think we're going to get weaker here. But a little bit of concern here. We did have some buying jump in, and this is a strong stock. So, it's not necessarily the greatest thing to be shorting, but I do believe if we move back to a correction, marketing correction, then I think this will drop a little bit further. Very dependent, of course, on retail sales. So if retail sales are down, Costco is going to be down. And I do think we're going to see, with the inflation this summer, I think we're going to see decreased sales. So that's what I think. Anyways, all right. Thank you very much. XLE, it bottomed at 70 again, got another bounce, entered into seeing how energy opens tomorrow. Well, actually, what's going to happen is that, on Tuesday. I was going to say it's not going to open tomorrow. It's not going to open on Monday, but it will open on Tuesday. The XLE, for everyone out there, is the ETF that covers the energy sector. Now, the XLE is mostly made up of Exxon and Chevron. Those are the two biggest components of the XLE. We did have a bounce here you're exactly right, at 70 today. It came down and then boom. So this seems to be a floor. I think what we're seeing is that this prior consolidation here had a floor of 70, but it also has a ceiling of about 78. So if, the potential here, I believe, is, it's up to about 80 and then it's probably going to bounce again. I think it's sort of in this sort of channel here. I think the XLE has formed sort of a channel here. And so I think if we don't have any more news on this, it's likely to oscillate within this channel. So you possibly, and I'm not doing this myself, but you could possibly get, I think, about a $7 or $8 move here if you were to buy it here. But I do think that there is definite resistance at right about 80 as well. So floor at 70, resistance at 80. Also, that it would say, if you look at the relative strength line, it is pointed down, and so it is less than it used to be. So this is likely to be weak. So it's not likely to. I don't think it's likely to go above 80, but I do think that we're in this weak rally. Not really a great place to buy it. I got in there and I thought we're gonna get a stronger bounce, but for right now I'm just and I took a loss. I took about a 3% loss on it. So I'm just kind of staying out, seeing, kind of seeing more direction. Right now the market is sort of going sideways. Tough market trade, obviously. But so I probably would not be jumping in on the XLE. I do think that we're starting to see gas prices moderate a little bit. I mean, right today they were about $4.40 here in Dallas, and Dallas usually has some of the cheapest prices in the country. So I think that the era of $5 gasoline is here, but I think it's going to probably stabilize throughout the summer because a lot of people, I think, this summer are going to drive a lot less just because of the cost. All right, Jim, is a reversal at 440 on the SPY possible before the next huge leg down? I definitely think, Derek, we're going to have a huge leg down. Let's move on over to the Spider. Now, the Spider, everybody, is the ETF, the exchange traded fund that covers the S&P index. So basically, on a weighted basis, everything that's in the S&P 500 is in the Spider. So that's kind of how it works. And it's used as a proxy for the market. Now, is it going to come all the way up to 440? I doubt it. Okay, this is 440 here, at least not in the short term. I just don't think it is. I think where it's going to hit resistance, at least for the time being, let's see if it could get above the 21-day line. Currently, the 21-day line is at 386. So here's the thing. I do think that we're at 381. So I think that, we possibly could have another move up to 386, but I don't believe it is going to do that. I think tomorrow you're going to see the Spider move lower. And why? Because take a look at this little part of the chart here. I'm going to kind of just put a square around it. You'll notice that when it went up, it pulled back down. It seems to be stuck right about here at 380. So 380 seems to be a beginning of a ceiling on this price. And I do expect that tomorrow, because of the way this candle looks, and I don't know if you can see it. Oops, I don't think you can see it because I don't have it on. But basically, there's a candle here, and this is the most current price action of today. And you'll notice that it's a blue candle, so that means it's an upward action candle. But the cross member is at the top. That means that it went up to this high, and then it was rejected. So therefore, I believe we have the formation of a ceiling and right at about 380. Let's see if we can take a look over on some of these interday charts and see. It came up here to 392 and then it was rejected. So I do believe that there is some resistance at this level between about 388 and 392. So that's where I kind of think that there's a little bit of resistance. I think it's going to come up basically potentially to there, and then I think it's going to fail because I just don't think this is a very strong rally on the S&P 500. So the spider is likely, I think, to reverse. It probably will move up to about 386, and then I think it's probably going to move lower once again, because I do think that we are going to, I don't think that it's going to reverse and move up to 440. I don't think so. Not in the short term. Not in the short term. All right. What's the deal with commodities? Is this good for the market? Or are funds liquidating their positions? Well, basically what's happening right now is that a lot of the big funds are stuck in stocks that I think they're going to have to get out of because they're dogs. I mean, that's one of the reasons why I shorted Lulu today, because I think that it had been a higher flyer, but it is now starting to, it's in the retail sector. So it's now starting to get some real pressure. And I think there's a lot of stocks like this that were formerly really, really good leading stocks. And now with the situation in the market, it's looking bad. Now, if you look at the relative strength line, we're on the weekly chart here, you'll notice that it is in a downward trend. All right. So if we take the peaks and we connect them together, you'll notice that the trend of the relative strength line is going down. So what's happening is not only is the S&P 500 falling, but because this line is going down faster than this one, actually Lululemon is falling faster than the S&P 500. So what's going on here? Well, that's what I'm saying, is this is weakness. And this stock used to be under accumulation by the big funds, but now they can't. So what you have is you have a lot of funds that are trapped in stocks like this that they can't really get out of because it's not that liquid. So there is going to be probably more demand for the puts, because that's the way that they can sort of hedge it. So that's one of the reasons I do expect we're going to have appreciation on the puts. But the problem, of course, is that we don't want to put it all on the line. We want to protect ourselves, because if we're wrong and we have a blow off top or something like that, or we have a short squeeze, then this thing will pop up to the upside. So really, long story short, I do think that, we're just going to have some more weakness in the market, and commodities, which have been leading, I think they're going to start moderating a little bit, because if the price of oil and natural gas gets too high, people will cut back on their electric usage, and they're traveling by car. So we're going to see probably a rollback on that. Let's look at the natural gas. This is a very interesting chart, and the reason I think it's so interesting is because most of the power in this country is generated with natural gas, and that's true in a lot of other countries too. But of course, the problem, of course, with natural gas, the price of natural gas has been going up just really, really strongly, and now but it's moderated. What happened is it kind of peaked out here, basically back here in May. So since about the third week of May, throughout June, we've had this decline in the price of natural gas. Now, you would think that would translate to cheaper power, but it's not, because, of course, it takes a while for everything to be taken up in the pipeline. But one thing I do want to show you, and this is critical, I do think we're going to see some moderating. I think what's happening is the prices shot up so quickly that a lot of people just, they just stopped using, they stopped turning their thermostat down if they're, and then they also still are not traveling as much, and they're not going to as many restaurants. And so this is what they call demand destruction. This, even though the prices are high, what's happening is the prices are being brought down potentially by demand destruction, where people just can't afford the electricity. So they just don't run it, they run it, instead of, at 85 or 90 on the AC, whereas if they weren't, they would be running at much, much harder. And I do think that this what they call demand destruction is a real thing, and it is going to happen somewhat in this country. People are just going to drive less. They're going to stay home, and it's going to be like that for a while. But I think that we may have seen, hopefully, at least for the midterm, the meantime, I think we've seen natural gas prices, I believe, are going to stabilize as well as oil prices, and that would be a very, very good thing, of course. But unfortunately, they're stabilizing at a high price, which is not a good thing. So it's the good with the bad. It's like it's like everything like this. All right. Your voice sounds a little rough. Are you doing okay? Yeah, I am. I'm just try. I just had a little bit of. Thank you for asking, by the way. I just had a little bit of a little bit of sore throat. I guess it just I don't know what it is. I don't know what it is. But thanks for noticing. I so appreciate that. Let's see, man. My spy calls went crazy today. Yeah, yeah, that's pretty darn good. I have to agree. I mean, there is I hope that I hope you make some money on the spy because it doesn't take a lot, but here's the thing. I think the overall trend, I think you got to be careful with the spider. The overall trend of the spider is downward, but today there was a relief rally. So if you do have profits on your calls, consider taking them quickly because it may reverse on you. But congrats. That's really, really good. Congrats on that. What's the deal with come on? Okay, this is okay, thank you so much. PA&W spread is going south. Yeah, cybersecurity area. Do you think it goes lower in a month? That is a very good question, Sam. I wish that this wasn't the case with PA&W. I did have to adjust on this trade, and it did rally today. So and I still am under the impression that we're going to see it move lower. Now, the relative strength line, where I kind of made my decision, of course, was when this relative strength line was dropping. It's sort of recovered somewhat, and the relative strength on this is pointed upwards. What I did, what I did on this trade. So let's go to the Palo Alto Networks trade here and take a look with the table. What we did here is we moved it out to August 5th. We bought back the July 15 puts, and then we pushed it out to July to the 5th. We may have to adjust it again. I hope not, but we may have to adjust it again, and then see what's happening see what's happening on it. We are down a little bit on the trade, and if you look at the trade here, Palo Alto Networks, we're down about $65, including the amount to push it out a little bit. So you might be down a little bit more than this, but that's sort of what I'm calculating now. All in, it's about 660 on this. All in on this. Now we could close this early. We would take a loss, about $114 loss approximately, but not terrible. But I just do think that I'm sorry, I was going with Costco. We would take about a $65 loss, $85 loss if we went now here. So the contract so basically, we're going to see, and this is I have to update some of these things, but yeah, we're going to definitely see a loss of week. But I do think that we are going to see a reversal and I do think we're going to go down further. I think we're going to take another leg down, and hopefully that will make this trade work. So you're right. I mean, you could definitely close it. What I did is what I did on the PA&W trade is that I bought the shares back, and then I went out a little bit further, hoping that that would make it work to the August 5th time frame. So that's kind of what I did there. All right, Jim, is it an American is it an American these Yoga pants, they are incredible. I agree. I agree with that. They are incredible. But, here's the thing. It's a Canadian company based in Vancouver. Very nice place, but it's a Canadian company, so just remember that. Um, so I can't imagine. I mean, I just think there's gonna be competition. I mean, I think that, there's gonna be knockoff Lululemon pants. I mean, they're like I think they're like a couple $100 for these things. I don't know, but I just can't see them. I don't know. Just my opinion, but I think it's going lower. I really do. But they are incredible, especially, certain people, certain women that wear them. It is pretty incredible, I have to admit. All right, CLVS. Let's take a look at CLVS. If I can CLVS. And this is on. Okay, so this Clover? I wonder if this is Clover. I don't know. I can't remember if this is not. Um, kind of a is this a practice or yeah? Develops anti-cancer for treatment and therapies for specific organs. Don't know anything about it. The problem with biotech and me is that I don't know. I don't have enough information. On clinical trials and stuff like this. This is a hard area to trade, but it has been trading well because medical has been doing well. What do I have to say for this? Well, I'm not really psyched with this. It's a $2 stock. Yes, it's moved up here a little bit, but I'm just not a fan of penny stocks. I'm just not, because when they go south, they can go south in a hurry. But you can make money on them too. So I would probably stay away from this one just because, first of all, I don't have the expertise to give you a really good information here. That's one of the main things. But also, the stock's under $10 a share, which makes it much more dangerous to buy because of the volatility. And I just think it's a tough one to trade. So I probably would not be in it. All right. Do you incorporate gap fills? Sometimes I do. Sometimes I do. Absolutely. By the way, everybody, a gap fill, of course, is when something gaps down, there's a propensity that gap will be filled. So if it comes way down, then it's a good idea to look at it to potentially move to fill that gap, and typically that is a good way to do it. But also you got to check the prices of the options, because a lot of times the options will actually incorporate that potential for a gap fill in the price, and that's usually what happens. So with the options. All right, SPX. This is Starbucks. This is also another short that I have on. Oh no, is it no SPX? Let's see if that works. SPX. I think that we're talking about Starbucks. I think we're talking about SBUX, which would be Starbucks. And that, let's take a look at this. We do have a spread on this one too. We did rally today, so I could be all wet. As you can see, that's where I shorted it with the two contracts, the 75.70 short. It's currently at 79. And it's been bouncing all over the place. It came down to the 50-day line, and then it bounced right back up. So right now, that 50-day line, let's see where that 50-day line is. I wonder if it will hold above that. It possibly could. So the 50-day line is at 75. So that's 4 above where we are. The break even on that would be about 75, right? So here we go with Starbucks. We're underwater on this trade, about $11. We're currently underwater on this one, trade on $11. But I do expect it to move lower. Now, here's one thing that is a little bit of concerning me as I started to look at this. The relative strength line is moving up, which means it is getting stronger against the S&P. So, but I do think that this is going to bounce. It bounced there on the 50-day line. It bounced again, and this is not quite a bounce. I think it's going to bounce there and move lower. We'll see what happens, because the normal way that Starbucks trades is it trades under the 21-day line, and currently we're above it, so I suspect it to move below it to move to equilibrium. So that's kind of what I expect for that. All right, Charter Communications, interesting, comes from R. So we get Charter C. CHTR, Charter Communication. This was owned at one time. Of course, Paul Allen is dead, but he was a big investor in this one, Charter Communications. I think they're out of St. Louis. This one does look like we're probably going to get a reversal on this one. We do have an upward trending relative strength line, but we've gotten a bounce there, and I do think this is going to bounce. But this has sort of been bouncing down. You see what happens? The norm on this stock is that it rallies to that 50-day line, pulls back, rallies to the 50-day line, pulls back, rallies. But you see the overall trend though is down. So I think what's happened here is that it rallied to the 21-day line, it pulled back, it then moved back up. But I think we're going to get a reversal on this, and I think it's probably going to go down. My guess is it's going to be in the next downward tranche. We're looking at about 405 on that one, and I think that it's likely to happen within 10 days. So that would be a significant amount of decrease here from 480 to about 405. I don't know if it's going to move down that quickly. It does have a roll check this line that's moving up, but I do think we're going to get resistance here and possibly a move down. The overall trend of Charter is still lower. All right. How does XBI look? Let's look at XBI. And the SBI, this is pro, if I were playing biotech, this is how I would do it. I think this is really smart here. Derek, the biotech is tough. There'll be more companies, stock companies that are in biotech than just in any other area of the market. So it's hard to know which individual one is working. But this allows us to basically take all the biotechs that are in the S&P and kind of put them in one place. And this is going to be the larger, more powerful biotechs, of course, but this is a great way to play the biotech sector. Now, it, again, just like everything else, and it's kind of just like a broken record. This is starting to break down. As you can see, initially, the S&P, the biotechs, initially were getting they were getting a ceiling at the 200-day line. But as time has gone on, it's hit the 200 line, but as time has gone on, it's not able to rally to the 200-day line anymore. It has to rally to the 50-day line. So it's rallied once there. This is not quite a rally. This you could consider this a rally. And then it's come down. So my guess is after it gets through doing this, it did it twice here. And actually, no, I'm sorry. It did it, let's see. It did it, 3 times. Yeah, 4 times. So 1, 2, 3, 4, 5. 1, 2, 3, 4, and then 1, 2. So I suspect we're going to get another one of these down trends. We're going to have it go down basically to that level. So that's kind of what I see. So I wouldn't go long on this one at all. I wouldn't go long. It's likely to go down. This market is still, I agree with you. I think it does. I think this market is going to fall. Right now, we're sort of in a relief rally. And the reason I know that is because, we're seeing these upward trends, but unfortunately it's on lower volume. So let's kind of take a look at the, at the NASDAQ to see if this is indeed the case, if I'm not just, blowing hot air. See what the NASDAQ tells us. Let's see. NASDAQ. Oh yeah, there we go. NASDAQ composite. Okay. Now, what we can kind of, the most important thing to look at here, I believe, when we're analyzing this is the volume, okay? Because yes, we're in a downward trend. Everybody knows we're in a downward trend. We had a we had a relief rally here. You see how it moved up on higher volume to here, but then immediately it went lower on lower volume. Now, even though it's at the, this red line is the this is an exponential chart. So this is the average. So this is the average here. So it looks as if it's making an attempt and then it's pulling back, and then making an attempt and pulling back. I think, at least for the NASDAQ, we're likely to see, we might have another update on Tuesday next week, but I think the trend of this overall is lower, and I do think that we are going to be going down at least probably through the rest of the summer. I think on the NASDAQ, we're looking at possibly a retracement on this back down to about 10,000 right there. That's where I think we're headed, at least through the summer. Is that so? I don't see this reversing course. As a matter of fact, I see it, intensifying its downward trend. So today the NASDAQ rallied, but the semiconductors, which are a big part of the NASDAQ, did not rally. So it's just I think we're going lower. People are saying the SPY's down. The people saying SPY down 30% is the bottom. Yeah, right. Exactly. I don't think it is. I wish it was. I mean, believe me, I would like to see it turn here. I would love to see the spider, and this is of course the S&P 500. I would love to see this turn here. I would love to see this turn, but I'm looking at the charts here, and they're telling me it's going lower. And I believe, and here's why I do believe this. I actually have some reasoning behind it. I think that that's where the support is. And I think the reason that there's support there is because there was a consolidation way back here in 2020. All right, that was the consolidation. See, this is a base form. What this means is that this is a basing form. Now, stocks don't go up or go down directly. They go up and then they get weak, and then they form a base form, and then and then they continue their movement up. Also, on the flip side, that can happen where it could come down and then it forms a base and then it goes down more. On this case, I think we're coming down. We're coming down. So we're just stepping down. We're going from this to possibly this. Now, the next kind of stop here on this is going to be the top of this formation, or at about 360. We're currently at 381 on the spider. So this is sort of going to be the next, I believe, right here is going to be the next kind of floor. Now, if it moves below about 360, which is 20 away from here, then I think our next stop is 320. And I do believe that this is probably where it's going to end, at about 320. But we're going to go lower, and we haven't seen anything yet, I don't think. Okay, let's look at AWK. Thank you, Charles, so much. Okay. And there we go. American Waterworks, interesting. Very interesting pattern. I'm on the weekly chart here. And there's a consolidation. That's interesting. That's very interesting. So the consolidation is this. It looks like it got support. It looks like it got support basically at 131. Currently it's at 153. So it did get some support there. So it's likely to move up, but I don't think, I doubt that it's going to move above the 50-day line. I would doubt it. So yes, you might have a little bit of a rally here, but in this downward trend with this low, what I consider low payoff stock, because the utilities, though they're great, I mean, they just aren't, they aren't really kind of the stocks that we like to trade. We like to trade stocks that have potential to double and triple. And that's not the case with American Waterworks, I don't think. There just isn't enough business, obviously, for them. How does this bear market compare to 08 and the tech bubble? Well, I was around for the 2000 tech bubble, and I was also around for the 08 housing price sell-off. In 2000, it was really interesting. It was a tech-led. What happened was the techs all traded up to an all-time high, and that was basically in December of 1999. And then almost like the stroke of midnight, the, Microsoft got weak, and then everything followed it down. As a matter of fact, I didn't trade Microsoft again until 2017, and basically spent 17 years in what they call basing pattern. And yeah, so I do think that we're going to see some stocks. I think when this thing finally shakes out, we're not even at the basing period right now. We're in the pullback period. That started in November of 2021. So we've begun the descent. We haven't bottomed yet. We need to bottom before the base can be built. The next base can be built. So we're not even there yet. And that's why I do believe that we're going to, at least the summer, we're probably going to be pulling lower. And then I think that there's a likelihood we will start to see it strengthen probably into the end of the year. September is usually a very good month. September and October are usually a very good month, but I mean, who knows? But I think that, at least for the summer, it's going to be a very long summer. So I think it's just going to be a very, very long summer. All right. Yeah, Derek's definitely the rally. It's been less than a week. And there, yeah. See, that's you're absolutely right. I mean, yes, we have a rally here, but literally it's been less than a week. This is a relief rally. This is not a real rally. So that's what I think. At least not now. Maybe it will change. I hope it will, but I don't think it will. Yeah, there are too many bears right now. I like to be a contrarian. Okay, Ellie was saying it could go to, wow, that's interesting. Okay, well, I definitely think that Elliott Wave is, yeah, I mean, it's very valid. I mean, for all that you don't know, that Elliott Wave theory is sort of a theory that operates on retracements, and it's very interesting. So, and in periods like this, I think there's a lot of credibility in Elliott Wave. I really believe it. It really is. Okay, so yeah. Marcos is predicting a 70% fall. Yeah, I tend to agree with this, actually. Now, of course, it won't stay on the bottom, but I do think that we're going to have a 70% fall. So if we had a 70% fall in the spider, what would that do? Well, let's go over to the monthly chart and see, because this is significant. Well, right now, we haven't really had, the last, this was the COVID, right here was the COVID, this is the COVID drawdown here, and that was already way at 230. I do believe that if we don't get support at this green line here, it doesn't look like we're getting support at this green line, that it could fall, and it could fall a lot. And I definitely think that it easily could fall to about 260 easily. Now, I'm saying I'm sort of not that bearish. I'm thinking in the short term, it's going to fall. The spider's going to fall to about 320. It's kind of where I think it's going to fall, right there. Because if you'll notice, right before the drawdown for the COVID, this was the higher high here. See, I think basically what's going to happen, what I'm kind of thinking is going to happen, is that we're going to give back all the gain that we made prior to the COVID drawdown. All right, that's my guess, and that would be about 320 on the spider. So that's what I think where we're going. And then, if we get support there, then I think we could possibly go higher. But as you can see, I mean, these drawdowns can be significant. This is on the monthly chart. See that? They can be very significant. So I think we're due. I think we're really due. This one was stopped in its tracks. They didn't let this one go. So I think that we have a residual issue here where it's going to happen anyways. And so I do think we're going down to about at least about 320, I think. Possibly it could go as low as 280. I don't think that's going to happen, though. I think about 320. Anyways, so that's a lot of stuff. Exxon is looking, wow, look at that. $6. Yeah, when the oil stuff, and also Saudi Arabia is doing well. They're going to pay off all their debts. Absolutely amazing. There a few years ago, Saudi Arabia was really hurting, and when it came to the coffers, and I think that's all going to change, and all because we didn't do drilling. It's amazing. This is the XOP, of course. It's the drillers, and it does look like it looks like they tested the 200. It's going up, so more drilling activity, and I think that hopefully that's good. That's good for the economy. The more drillers out there working, the better we're going to have. The better it's going to be. So I really, really agree with that. All right, I think the downfall of everyone's because, yeah, it really is a brand. Unfortunately, it is. I wish this. I wish the nightmare would end. But anyways, it is what it is. Let's go for it. I like that. I like that. Well, I'm almost at the end here. I've just yammered on and yammered on. So much to talk about. I'm going to be back on Tuesday. So happy 4th of July, everybody. Happy 4th of July. We'll be back on July 5th. So basically, I'll be back on July 5th, everybody. Thanks so much for taking a look at the show. Be careful out there, but right now I'm mostly in cash. I've got these shorts going. Hopefully that will work. I mean, we did have a little bit of rally, so it doesn't look as good with them, with the stock prices rallying. You do the short and then it rallies. But I think if these are extended and we keep we keep after them, I think the prices are going to go down. I don't think we've seen the bottom yet, and so I think that they will perform pretty well. If you want to get on the action trade alerts, super easy. I think I have one more question. Thank you very much. Oh, 5. Wow. Happy 4th, everybody. And stay safe. Have a great barbecue. I know I'm going to do going swimming. Hopefully, it'll be nice here. I'm going to be staying in Dallas, but because it's pretty hot here. But hopefully, everyone has a great 4th of July. Thank you so for watching the show. Please, if you can, tell your friends about the show. It really helps me when you like the show and then possibly subscribe. It really, really helps me, and I so appreciate it, of course. And of course, if you're not already a member of the Trade Alerts, just easy to get on www. Dallas Trading Floor. So without further ado, everybody, happy 4th, and I will see you back here on Tuesday at about 5 Central.